Good morning, everyone. Welcome to Admiral Markets. This is the live webinar taking a look at strategy today on the 24th of February, 2016. Thanks for joining. Before we take a look at the Forex markets and other instruments and the live charts, be aware that this webinar is shown to a global audience, yet may not be suitable for everyone. Please take a look at this link, admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity to find out if it is suitable for you and other conditions and details. Also, please be aware that trading for exchange or global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, sorry for yesterday's sound problems. I hope that it will not happen today. And luckily, we still managed to squeeze an hour, or a bit more than that in our webinar. But then eventually, I wasn't able to get the sound back. So hopefully, we will not have that issue today. I, like always, want to take a look before we look at the charts. Make you aware of these following things. We have WebTrader, which is a web browser-based platform, so you can see the charts on other devices, and if you're mobile or somewhere else, you can check out the charts from various places. So that's easy to monitor trades, and you can use that to your advantage. But if you're at home and you prefer using a more stationary platform or more, platform that has more indicators from your custom-made indicators, you can use MT4 Supreme Edition because that also has extra 60 features. In fact, a plugin basically that makes trading life a bit easier. So take a look at that, trading platforms, and then MetaTrader Force Supreme Edition. All right, moving on to the calendar, we'll take a look at that as well. Do we have some major red news events? We do one here tagged for the USD new home sales, and otherwise we got a lot of yellow and green lights flashing in front of our eyes here. Got pound mortgage approvals in, I guess, 1 hour 40. That's yellow. And we got some green as well, euro industrial sales. Let's also take a look at the heat map. Let's see. All right, we had some stocks that were not doing that great yesterday. Let's take a look at the currency pairs. And again, pretty good movements. I mean, not the crazy 2.5% as yesterday, but we do have a bunch of them below the 1%. And that's also actually quite a lot of movement, in fact, compared to the average. Normally, we see the biggest one around the 1%, right, or +1 or -1. Yesterday, it was a whopping 2.5%. Today, we see some below the 1%, which is still maybe not as crazy or big of a movement as yesterday, but still pretty decent movement there. Directional movement to the downside. Pound Swiss, pound yen, a lot of yens, CAD yen, New Zealand yen. What is this? New Zealand yen, odd yen. Yeah, got CAD yen, I think, here. So yen definitely moving down. And I realize now, is Beverly in the room today? I actually realized I forgot to look at New Zealand CAD. We got cut off yesterday. So I'll do that today, Beverly. Can look at that soon. All right, and others volatile. Well, pound CAD was very volatile, but it didn't really move as much. Euro, New Zealand, euro, pound to the upside. You can see some trades, some currency pairs that didn't move too much were actually New Zealand CAD and euro dollar and what is this one? Odd USD. All right, enough said about that. Let's take a look at the live charts. So what we got here, euro dollar. Well, as we said, there was a good chance of downside yesterday, either just because price could go back to this 21 EMA band on the 4-hour chart or the 1-hour chart. We were looking at the EMAs. That's today's focus again, is using EMAs for trading. And both EMAs basically did hold price, did contain price or stop it, however you want to call it. And you can see basically, well, actually, sorry, it didn't hit it. It looked from when I zoomed out, it looked like it did, but when I zoom in, sorry, in fact, it didn't. But the hourly did stop price. and this 21 EMA becoming pretty heavy resistance at the moment. So not interested in any upside unless price really gets above that 21 EMA with a good momentum, a couple of candles that don't touch the 21 EMA and then hooks back to it. That does not seem likely at the moment, but that's when I would become bullish again. Otherwise, until that moment happens, I'm bearish considering the 21 EMA. Now on the 4-hour chart, we are in a bit of a tough spot because you can see the long-term and short-term moving average are on top of each other. However, slowly but surely, we're trying to break below the 61.8. So the next target will be the 78.6 fib at 109.30. That could be, again, a bouncing spot. On the hourly, what happened? Well, basically, yesterday's entry was here, or the break of this green line. But price didn't really fall too far. To be honest, the break below this low, 110.16, went down to 109.90. So it really only fell about 25 pips, which is very, very small movement here. Then it started to consolidate and go sideways. So not much really happened on the euro dollar. We did get a break. Price made a pullback in a way again after the break, and it seems like it's pushing down. Maybe this time it could be a bit more impulsive. Maybe this time it has that space down to the 78.6 fib. But from a moving average point of view, the 21 EMA didn't get hit on the 4-hour. It did get hit on the 1 hour. So basically we had a fall here, a pullback here, and then the 8 EMA turned back down here. That happened again here, and here, and here. The 8 EMA turned. But what is the difference? The difference between the arrows on the right and the one arrow on the left is that we had momentum here. This was a good momentum. That's why this first turnaround, this first continuation with the red arrow is a lot stronger of a setup than setups here. Do you see the difference? Because of the momentum that took place before that. This little breakout here is nothing compared to the momentum we had here, right? Big difference. So when price hooks back to it, basically it's not the same environment. This is very important. That's why the first setup here is a lot more, has a higher chance of succeeding than any setup in this zone. All right. Now, some of you might have been patient and just kept the trade over throughout the Asian session, and then you could put the stop loss just above these tops, I would say. Others who have not joined that trade could be in a position to do that if this little bottom gets broken. This low, it's still okay from a time factor point of view. It's still fine because this is the fifth candle. But personally, probably I would wait for a break. I would like to see an hourly candle below it. I would not take a market. I would not take a pending order. Excuse me. I'll keep an eye on this candle. See a next candle. See if we get something like this, and probably look for a small little pullback to that same level and continuation. Could be worth a pending order, but I only use pending orders if I really, really like a trade a lot. Then this one just doesn't, I would say, doesn't qualify like that much. If we had a good momentum like that, it could be worth the pending. But if we have something like this, I don't think it is worth the pending. It's too choppy here. But in favor of a downside is a good space between the long-term and short-term moving average. That's fine. So I do think we have a good chance of getting an intraday downside environment here on the euro dollar. It's just not maybe as great as it was here. That's all. But there's a decent chance. So I wouldn't be against the short, but not using a pending order. Also, the 4-hour is choppy. The moving averages are on top of each other. That's why a bit more caution is good. It doesn't mean though that the downside would not work. The upside at the 78.6 fib might also be interesting, but here too, I don't find it particularly strong enough to take a pending order. Well, it could be if you are tempted by thinking about a pending order because I'm talking about it, then what I would do is put the stop loss below this. Would have to be below this bottom, or at least below 109 at the very minimum. 30 pips below the 78.6 FIB. I prefer the pending order. I prefer the market order. Excuse me. I'm getting my words mixed up. Right, and you never know if this is going to be a bounce. It could be a small bounce, but perhaps this is just the end of a correction. And when we break that trend line and start to bounce off the 78.6 fib, but make a bit of a bear flag and then start to break, well, then we are below the trend line and we're in a bearish environment. And there could be a turnaround on the daily chart and we could be back in the downtrend. However, if we get a strong bounce at the 78.6 fib, and then we see a bull flag, then we're probably still in the bullish environment. It's very important to see how price will respond and react to the 78.6 fib. That will tell us if we're in a bigger downtrend or we're still back in the uptrend and bouncing back up and more in a bullish terrain. All right, pound USD took a lot of time, really pushing the patience there of any trader. Did anyone take this trade to the downside and after the news event, and how long did you stay in, or are you still in? Just curious about your experience. Now, I didn't manage. It was taking too long for me. But if I use my own time rule, I probably was a bit premature on that because, the candle rule that I say 5 candles, we have 5 to 6 candles, the time to wait for a new low. And if you use that rule, look at this. We had a low here. We had a low here. If you look at it from here onwards, right? Let me put a line there. Ignore this bottom for a second, okay? So we had a low here. We had a low here, all within 5 to 6 candles. We had a low here. Then we had 1, 2, 3 candles not breaking the low, but boom, the 4th candle did break the low. Then again, 1 candle not breaking the low, but the next one did. So this entire move, we did get lower lows, all within 5 to 6 candles. So from a time perspective, interestingly enough, it did keep pushing lower, but it was just very choppy at the start, and the entire London session was choppy, and actually it started to move after the London session was over, and I decided not to trade beyond the London session, and it actually started to move after the London session. One of those things happened. But the idea basically, remember, was after the news event, if we get a pullback to the 21 EMA, first of all, let's take a look at the fact that there are a lot of candles below the 21 EMA. Remember that strategy that I spoke about last week? That's step 1. Step 2 is that price touches the 21 EMA and that the 8 EMA goes in the opposite direction. That's step 2. That's the retracement. When that happens, the retracement has been completed. So step 1 is basically the momentum and the impulse. Step 2 is the pullback. And how do we define the pullback? Well, how do we find the impulse? Is when a lot of candles, more than 5 candles, are not hitting the 21 EMA. That's step 1. Step 2 is getting a pullback. How do we define the pullback? By having price going back to the 21 EMA and having the 8 EMA turn into the opposite direction. Step 2. Step 3 is the potential continuation. How do we define that? Basically, 8 EMA turning back into the original direction, which in this case is bearish. That's step 3. And that would be the entry. So we had that where, what? This candle. That was after the news event. And an entry right there, or retracement of that candle would have been in 141, 140, 110-ish. Stop loss above the fractal here, 141.55. And at this moment, I would say the stop loss, ideal stop loss is somewhere at 140.30. Trail stop loss. There's nothing wrong with taking profit here either necessarily, but um, if there is a trail, then that's what I would do. 140.30 probably. Let's take a look at the 4-hour chart, see if there's a good candle to hide the stop loss. This candle seems okay, but it is small. It's okay, but it is small. So that's the 140.30 stop loss. If you're still looking for a stronger candle, then this high is actually it. So that's not locking in any profit though. Regarding targets of the fibs, let's take a look. We're actually beyond the 61.8 target. What is the next target? 139. We're at a minus 272 target, but that could be just a small reaction. But could cause a bounce. Next target, 138.60. All right. So let's see. I mean, time will tell if we get a bounce or not. Really, of course, we never know. But if you're in that trade, I guess no one is because no one wrote. But if you are, I would personally go beyond above this, lock in some profit, and hang in there to put a target probably at 139. Let me take a look where the daily pivots are. Give a bit more info on that, but do that just in a second. So yeah, that's basically it. We did have a touch in the 21 EMA right there. Did you see that? But the 8 EMA didn't turn. So it's not a full strong pullback. It's just a minor one as yet, not one that qualifies. All right, this particular system would need, or strategy would need, the 8 EMA to turn as well. That's the difference there. All right, but anyhow, it did work out. It just took a lot of time. So that's that setup. Oh, wait, I have the pivot points now in front of me. Let me give you those. Yeah, S1 is 139.13. S2, 138.40. So 139, I think 139, 20 or 15 makes sense. Just to go a bit above that 139. And the second target could be indeed all the way down at 138.40, apparently. If the pound has been moving a lot, that could be maybe possible. But after that, I would probably really be cautious. I mean, you get a few pushes, strong pushes, but eventually you're going to get a bigger retracement. And eventually I would expect this 4-hour chart, like I was explaining yesterday, that you get, some good pushes, but eventually you get a retracement on this time frame, right? This is maybe, for instance, 50-minute chart, so you get a good 50-minute pushes, but then you get a retracement on the 50-minute chart, which is maybe a retracement on the hourly again, and you get a good 4-hourly pushes, but then you get the 4-hour retracement. Do you remember that? If you were joining yesterday, hopefully that rings a bell. So this is basically a good momentum on the 4-hour chart, right? Look how many candles we are below the 4-hour 21 EMA. This is already candle number 12. But eventually price is going to go back to that 21 EMA. And that could be, once price gets back to that 21 EMA and turns, could be again a good 4-hour setup. So that's, I think, still possible. The 4-hour world is still available for a good setup. It's just that probably, we don't know if it's going to be today. It could be happening tomorrow, Friday, maybe even next week. At the moment, we clearly have an impulse on the 4-hour chart, and this was a good scale in, or a good, not scale in necessarily, but a good pullback within that momentum on the 4-hour chart. And is now continuing. And hopefully, for those that are in, we'll continue. We'll continue to 139, 138.60. 139.10, sorry. 15 to be precise. If you're not in that trade, then either price could go back to that hourly like this and turn again. Could be another way to still take a trade. I mean, this is getting a bit riskier, I would say, because this leg has not moved as much as this leg, but it's possible still if price does this and then turns, it could still be position. But the last one, I would not take any one after that on the hourly chart because we already have two. As I said, the first two are typically the best, or you could even consider this one maybe to be one as well. The more the more setups, the riskier it gets. The third, the fourth, the fifth are riskier. But we still have a very good gap between these moving averages, so one more setup could be okay on the hourly. How about the 15-minute chart? Well, we have a bit of divergence, so we know that there's a bit of a chance to get a bigger retracement, but there's only a single divergence, so it's not very strong. And you can see on this 50-minute chart, there were potential trades to look at when price pulled back to the 21 EMA and then turned back down again. Here, those circles could have been methods. I mean, potential pullbacks, right, within this downside, just like here as well, by the way. But not in this piece, not here, because it moved so fast, it kept pushing. So is this a pullback again? Well, let's start counting. 1, 2, 3, 4, 5, number 6. Well, as I said, 1, 2 are good, third is okay-ish. You get 4 or 5. I mean, sometimes it works because price can really push, especially on a 50-minute chart. You get big impulses, but eventually you're going to get a bigger correction. And especially with the pound USD open in London session, I would probably not take this 15-minute setup and just wait to see if we get an hourly setup on this pound USD. Sometimes this was just a retracement, but in this case, we could get a zigzag up to the long-term moving average, and then that would be the reset moment. As soon as price gets back to the long-term moving average, this leg is over. At this moment, this is still one leg because price didn't go back to the long-term moving average. We can use, and now I'm maybe mixing up two things, so if this is getting too much confusion, just skip this part. But for those that have joined the webinar more often, you know that I use a Fibonacci sequence tool. Wait, let me use that on the hourly chart actually. To calculate how far the market can go before finding some moment of retracement. Let me drag on the script quickly. And let's see how far this has fallen. So for those of you that know this indicator or script, this is level 1, 2, 3. This is the base level, 0. So we passed third. That's when we get the most impulse down to 5. Between 3, 4, and 4 and 5 is typically the best zone, unless you're looking at pound yen, right? So we're at 5. And between 5 and 6, which is all the way down to 137.50, you typically get more choppy move down. And we're right at 5. So I think that's another confirmation to be cautious of the 50-minute chart. When you're at 5, you can maybe dip a bit lower, but eventually there's a good chance of retracement back to level 4, or just hitting the 21 band and falling in a kind of channel like this down to 5. So I don't think it is a good environment for a 50-minute chart, personally. But as you can see, those are my arguments at least. All right, you can see that fourth level giving another confluence, by the way, in that downside yesterday we talked about, which we didn't have on the chart, but you can see now. All right, some questions. What indicators are in the graphics? Let's see, those are 6 EMAs at the moment, a fractal, and awesome oscillator. The fractal and awesome oscillator you can find by going to your tools and going to Bill Williams and adding awesome oscillator and fractals. Fractals just show tops and bottoms. Basically, awesome oscillator is like a MACD showing momentum. The six moving averages are one short, three medium, and two long term. This is the short term one with the red circle. That's an 8 EMA close. The three orange are 21 EMAs, high, low, and close. And the long term ones are 144 EMA close and 169 EMA close. And this moving average indicator shows different colors depending if it's bullish or bearish. And if you're interested in getting that, I can send it to you for free, but I prefer it if you send me an email, because that helps me with continuing with this webinar without having to write down your email address or anyone who wants that. Anyone who wants this indicator, you can do so by sending me an email with a quick explanation of what you're looking for. Just say, I'm a indicator and I know enough. Okay? There you go. All right. Do you think Brexit is part of what has caused pound weakness? I do think so, yes. Yeah, I do think so. And why, of course, is always a difficult question, and I guess there could be multiple factors and depends on who you ask and stuff like that. But in my humble opinion, I do think that that's definitely a factor. How much? Difficult to say, but I think it could be actually a decent amount of it. I mean, technically, yeah, we were already nicely in a weekly chart. If we looked at that, we had a good downside, but this was dollar strength more than I would say pound weakness driven, right? Then we had a correction to the 50 fib. And bounce off that. Now, obviously, you can always go higher to a higher fib, but we had a gap between these moving averages. If we just look from a technical point of view, price broke below the 21 EMA. So that was already a moment that we thought, okay, this could be ready for continuation to the downside, right? Then if we look at the daily chart, here you can see that slow start because weekly we were kind of choppy in this. And back then, remember, we were saying like, okay, if it breaks this line, we're going to accelerate. Price did, and the gap between the long and short term was really accelerating. A lot of candles below this 21 EMA, which means that there was a lot of momentum and there was a strong push down. So when price gets back to that 21 EMA and then breaks below it on the daily chart, that would be here. Sorry, the 8 EMA changed here and here. Remember we talked about it yesterday. Then those could be continuation signals, and it surely did. It's looking like a big fall now already, actually, and could continue. So technically, I think it was very nice, but I think that definitely the Brexit is a factor. Yeah, I think that, yeah, oh, you mean that this was because of Brexit? Yes, or the potential of Brexit. Yes, could certainly have caused it, indeed. Good point. And I just actually haven't read the study yet, but Darren Sinden, who does market research at Admiral Markets, you can find a lot of his info, by the way, on analytics. Just go to fundamental analysis here, all right? And you'll find a lot of his updates. If you're into fundamentals, definitely take a look at his articles and other articles there. We got a lot of updates there. So, and he sent something of a document to me that mentioned just this morning that mentioned that Brexit is not good for UK business, but the question is how bad is it? I didn't read it. I just saw the headlines, so I didn't read the details yet. But that's great, Beverly. Well, if you like taking a look at having a feel for the fundamentals, then I'll definitely recommend looking at Darren's articles on fundamental analysis. Always good and always informative. And then if you're not into fundamentals that much, then you can take a look at technicals and waves, perhaps. Well, and also our traders blog, by the way. Nanette and I write once a week on this, so you got 2 articles a week. We talk about different things. Recently, Nanette talked about how to build up a small Forex account where he took a small amount. I think he started with 200 euros and managed to make it 1,000. So that could be interesting for traders to read through it. That who don't have very high capital or can start with a small amount, then this could be interesting for you. Yeah, sure thing, Beverly. Sure. So Dalian talked about this one too, right? And the fact that a pullback still could be a good continuation. So we had price kind of very much hesitating here, not really getting the push that I was hoping for. Remember, I was saying like would really actually like to see it push a bit more and then hook back. But okay, if it does hook back earlier, then that still could be good. Um, and well, the momentum is really not. I mean, it is going lower, but there's not a lot of momentum here. It has never really shown a lot of momentum since it started to turn up in here. So yesterday's scaling or trade could have been here when price went back. Right, we had a couple of candles below the 21 EMA. Check. We had price going back to the 21 EMA and 8 EMA turning. Check. Then we had the turn of the 8 EMA. Check. So somewhere in here or here could have been an entry. But if you're in that trade, I would go out of it now, or you're already out of it because using a fractal, using trade management, there's no reason I think necessary to stay in it unless you put your stop loss here and you want to keep that risk on it. I am not a big fan of it. If I look at price action like this, it's still possible it can turn. I'm not saying, but I'm not a big fan of it. So I personally would not want to stay in that trade and rather take out for 3 pips loss, small loss basically, or break even. It's just choppy to me. This is candle number 4. So from that point of view, the time factor is still on the side of the bearish momentum to the downside, or the bearish, well, maybe there's no momentum, but the bearish direction. But I think it's just too choppy personally. But that's my opinion. Overall, if you're still in the 4-hour setup that we talked about here last week, then the trail stop could be here or above any strong 4-hour candle. The strongest 4-hour candle is here at the moment, but I wouldn't be against putting it here either and using this candle. Ultimately, all 3 levels make sense. That's the 4-hour world, though. Depends if you're in this setup or this setup, right? Those are 2 setups. If you're in the second setup, I wouldn't leave risk on the table. I would then definitely go at a break even at the very minimum. Either break even or right above here and lock in some profit. If you're in the first setup, then all 3 are an option. It definitely has lost downward C, and very curious if it can break through this bottom. And it could turn out to be a bounce off the 78.6 fib. And it could be a bounce to the minus 272 target, and we move down lower again. That's why I definitely, urge caution with setups here, not to lose money on those. It's not needed. Price has moved already well in our favor, and if it breaks this trend line that I just drew and breaks above the 21 EMA, there is a potential choppy move up to that level, maybe. Yeah, that makes a lot of sense, Beverly. Probably managed to squeeze out some profit at least, and I think that makes a lot of sense. This is very choppy. This is looking like a corrective channel, and actually this is looking more like momentum, and that this could happen. But let's see. In fact, if you are a reversal trader, if you're a contrarian trader, then you might be even looking for signals to the upside. For instance, time factor. If we get a couple of candles and a hook back to the 21 EMA, for instance, that could be a reversal set up on a 4-hour chart. Trying to trade a 4-hour break here, looking for perhaps a candle even above the 21 EMA, hook back, and then like that, right? But those are difficult and higher risk, absolutely. So be careful of that, and more suitable for traders with substantial experience. Okay, so 120 pips, great job. The trend is down. It's easier to trade with the trend, and that's why these setups made already profit or break even. And it's good to focus on trading with the trend. At this moment, though, we don't have a with the trend set up on the 4-hour. Why? I think it's too choppy. There are only 6 candles here. Kind of iffy if this qualifies. Hourly chart doesn't qualify, so I don't see any downside setups either. Alrighty, pound yen did move a lot down actually. Let's see, 23rd. So it fell over the course more in the Asian session though here too. Let's take a look. Here you can see, this was after the London session. It started to fall and move down a lot. Pound yen does move a lot, so when it falls. When there's a good momentum, it can really push a lot, right? Now, was there a setup according to this strategy? Unfortunately, no. Just didn't get there because the 8 EMA didn't turn here. So technically, no. So that happens sometimes. The pound yen did have setups here, and here, and here, and here. As you can see, there could have been some 5 setups, perhaps, of which 2 were in the same area. But yeah, oh, here one more, sorry. But here it just kind of missed the correction. But did fall. Anyhow, yesterday I said already that I was not really interested in a 1-hour setup because I thought that it was already pushing probably too much and that a 4-hour retracement would be better, but just goes to show how far it can push. This is a 4-hour world now, and we're now in candle number 20, not touching the 21 EMA. So I think that if price goes back to the 21 EMA, that there's still a good potential for further continuation. That's the same story as yesterday. On the hourly chart, we did have an 8 EMA turn already, as you can see here, and we had the 21 EMA touch. But if you remember our rule regarding setups, this is setup already number 6 or so. So we're running into that same little problem that it still as yesterday. It could be, again, overextended. Let me use this sequence level to see how far price has pushed. And maybe yesterday's call that it was too far was early, but doesn't mean that today is not that it hasn't pushed too far. Let's see. This is 1, 2, 3, 4, 5, 6, 7. Now, mind you, that on a euro dollar, 3 to 5 is the best, but on a pound yen, because it moves more, actually 4 to 6 is a bit better. So that was the sweetest zone. And yesterday we were already below 6, so typically between 6 and 7 is choppier. So from that point of view, it did make sense to be cautious here because it was pretty close to 7 already, and now we hit 7. So I think I still stand by my thoughts of yesterday that now is a bit dangerous to trade on the hourly. So I'd rather look at the 4-hour. And let's see. Using RSI, well, I think it cannot hurt. I don't do it, so I don't have really a feeling for that indicator. I wouldn't be able to give you much feedback, perhaps besides the obvious in a way, or let's say the basic thing regarding divergence, for instance. But I think if you use it regularly and you have a feel for it, why not? If you think it can be good, it could be a good extra to confirm. We can add it. Why not? Take a look. And by the way, thank you, Beverly. I'm glad you liked that the blog about the hobbies. I think that there are definitely some things that help. Actually, I had some other ideas after that I thought, oh, that could have been good too. And I didn't think about it at the time when I wrote the blog, and now I don't remember anymore. But what that was. But we get this RSI on. Uh, I don't know why it's a bit slow at the moment. Oh, there we go. All right. Let's go with a lower number. I don't know. Let's try 10. Let's see. Well, let's take a look at the hourly. Looks like these readings are a tad weaker than before, so this is what I was a bit afraid of. I just see a confirmation of what the awesome oscillator is telling me, and I don't really see much that it can add. I'm sure it could add if you use it. I mean, if you have experience in it. For me, at the moment, it doesn't really do much except confirm what I already was thinking at the moment. Alrighty. Let's see. Pound dot. Now price, let's see, didn't make the retracement here. Went down a bit after the news event, then went up later, and then down again, and then up, and it's been choppy. So this candle could have been a setup, but it hasn't gone anywhere as yet. But that was the one that qualified the best. The 8 EMA is bullishly up, right? The price hit the 21 EMA. We had a good number of candles below here, and then this was the first turn back down. So that would have been a setup right there with the stop loss above this high or above the candle here. Any of the two is good. And at this moment, a trail stop loss might make sense just to put it above these tops here. Reduce the risk and see if it now can continue, because price is hitting the 21 EMA, not breaking above it. So there's a good chance of continuation. $21 EMA on the hourly, euro odd. Here was a setup yesterday, as we discussed yesterday as well. But then price also broke through this trend line. That was another setup, but didn't go out too far. And I think that that could have been a loss, or depending on how you trade management, it break even. I think that definitely using a candle high like that is nothing wrong with, for instance, right? We got a lot of candles below it, so not that the candle is very strong, but we did have quite a lot of candles going sideways after that. All right, at the moment, price is again retracing and above the 21 EMA. And we got a good gap between this. So I think that there's a good chance of a continuation down. Actually, here the 8 EMA turned down again. But we got a 21 EMA that has been bullish for quite a long while. So I think that any candle, any bearish candle that manages to break below the 21 EMA, that could be a signal, either an entry there or a retracement. Could look for downside after that. There is no divergence between these bottoms, so there's a good chance that the 38.2 pullback that we had just a few hours ago is the turning spot. This was a momentum, no divergence. This is a pullback, and this could be then the continuation back down again, down to the target at 150.16. At the moment, the 21 EMAs is acting as support. So if that breaks, this could be the breakout trade. Now the 8 EMA actually already turned here, and that could have been an entry. The only thing that would worry me about that is that price 21 EMA has been bullishly already for a decent number of candles, not 4 or 5, but we're talking about 16. Plus, we had a few candles above the 21 EMA even. And those are warning signs that you got to be a bit more cautious. So I don't think that therefore this was a good short entry. And I do think that it's better to look for a breakout trade below these bottoms. In my opinion. That's my plan at least. So yeah, we can look at DAX and IDEN definitely. So I think Euro could be a setup. I think pound odd isn't a setup. I think that's just a trade management issue from or item from yesterday. I think that euro dollar is trade management from yesterday, unless it shows a good candle. A good. Let me think what I need to see here. Let's see. This could be a hook back already. We did push through this bottom. It could be a short, but I still will wait. I don't like this entire choppiness, so I'm not a big fan of this euro dollar. But the pound USD, let's see. Oh yeah, that's a matter of trade management too. Dollar yen too. But both the pound and the dollar yen. If price does get back to the 4-hour EMA, I think that is a good setup. Same for the pound yen as well, actually. Those are all 4-hour charts, I think. All right, so that was a quick summary. So from that point of view, most are 4-hour items except the euro odd, I would say. Either trade management or 4-hour. All right, so let's take a look at some new pairs. Derek mentioned DAX and odd yens, and then so let's do that first, and then we'll take a look at dollar CAD. And if you have any preference, let me know, and we'll do that right after that. Odd yen. Oh, this is, as you can see, I haven't looked at odd yen. All right. Well, I don't have. Let me start from the top because I don't have any feeling for this pair. I mean, at this moment right now. So let me take a look at this. We got monthly pair being squeezed between these moving averages. In fact, momentum is down though. Oh, great, Roger. We'll take a look at the EuroCAD right after this, or let's take a look now. Sorry, Derek, just give me a second because Roger's talking about a EuroCAD and something of a setup that he's mentioned. So a short. So let's take a look right now, and then we'll go back to the IDN. Don't worry. Okay, so let's see. 4-hour chart. There's a gap between short and long. We had some candles below 21 EMA, not a bunch, and only one big one and a couple of bullish ones, in fact. It's okay. It's okay. It's not great, but it's okay. Not fantastic though. But yeah, the 21 is below the 144. That's good. Candle number 9. Okay. Daily chart is. This is a reversal trade on the daily, but it does make sense. This is one of those situations, excuse me, that reversal does make sense because this is the first dip below the 21. This is the failure to break above it, really, and the hook back for more downside. And this could be the second push down to the long-term moving averages. Big wick last month. 1, 2, 3, 4, fifth candle on the weekly. So let's put a fib from here to here to see where the weakness is. 78.6 fib bounce, as you can see. Where's the target? The minus 272 target, right at the long-term moving averages, 148.40. That's the main target for the moment, for this correction. All right, now moving down to the 4-hour chart, we can see prices at the previous bottom. But the 4 hour is already in a downside mood, and we have space to the target, I would say. All right, hourly. This is the third setup. This is 1, this is 2, this is 3, so it's still okayish. And indeed, price, I don't have the 8 EMA. Hang on. Let me use a different template. 8 EMA turn, definitely here a bit, but I would say this one is the candle. So yeah, it looks like a 1 hour setup to me, in fact. So I agree. I think that makes sense. Stop loss probably above here. Let's see. Targets. Let me use this 4-hour chart. Let's put a swing here to here. The bigger target is known, but let's see what the smaller targets are in the meantime. Big target is 148.30. Small target 149.27. But Roger has a good point. There's a 150 right, psychological number. And so I think that makes sense. If you draw this trend line too, that's something to be aware of. So let's take a look where that trend line is. Maybe there's confluence. It's just below 150. Well, yeah, 150 is a psychological level too. So that's something to probably that makes a lot of sense. The other method, if the 1 hour seems a bit dicey or risky, then the other could be the 4-hour chart. By the way, this is the second setup on the 4-hour chart. This is the first. This could be the second, but we're not there totally. We do have a couple of candles below the 21 EMA. We do have price going back to the 21 EMA and the 8 EMA turning. So those two things have been completed. Now the 8 EMA needs to turn, and that would be this candle. This candle needs to close bearish, close to the low. The 8 EMA turns, that would be the 4-hour setup. So if the 1 hour seems a bit risky, then this could be, I think, a solution for myself as well. And that could be a setup 2. On the 4-hour chart. All right, so interesting stuff. Let's take a look. Thank you, Roger, for that, for mentioning this one. And Adyen, we were looking at Let me think again. 1 second. Bearish mode on the weekly. Daily is in a correction though. Why? Because we got substantial number of candles. We had a good momentum here, but this is already a decent sized correction. So we had setups here and here, and then continuation here after the, or better said here maybe actually, and then here again. Let's see. I would say the 8 EMA is not green somehow, but I think that's clearly bullish here. I don't know why it's not green. I think it qualifies. I think that this is a pullback. I'm just not sure if it's good for trade right now, to be honest, because this seems to be like a correction. And what I mean is this: on the 4-hour chart, you see it better. You see an impulse here, and then you see this going sideways. Do you see that? And those flags can break. It could break like this too, up and aside and up, and then turn back down. Also, on the 4-hour chart, I don't see any substantial candles below the 21 EMA, besides here. But now, price has stayed going sideways so long that I would not be looking for. I mean, this could continue, but I don't think it qualifies. I think it's probably better, in all honesty, to wait for a bit of impulse, wait at least 5 candles have below the 21 EMA. Then I think we're in a better environment for looking for shorts. I think it is in a bearish environment on weekly, daily, but monthly and 4-hour are not. Well, monthly is not that important, but 4-hour is, as I would say, a bit choppy, and therefore I would rather wait for more confirmation. I would rather wait for a good break and then look for pullback on 4-hour, 1-hour, personally. All right, DAX. Looks like again a pullback, but he had, of course, a downtrend here so far like this, and we had pullbacks here, although that was still within the long term, and here, and this could be another one, but this shouldn't count because it's still within the long term. So this could be a second one, and we do have a couple of candles below the 21 EMA. We have a pullback to it. So if today turns bearish, that could be again a signal that price might be heading downwards again. We already had a retracement to the 21 to the long term, and this could be pulling the moving averages and making this not only a retracement, but this could pull it back into more stronger bearish territory, in fact. So from that point of view, daily looks like it's ready for a breakout to the downside or continuation. I mean, after today could be. Let me say it this way. Now, the 4-hour point of view, this is a strong retracement, which resets actually the downside on the 4-hour chart. Why? Because we went back to the long-term moving average. So this is one leg now, which means we could put a fib from here to here, and price went back to the 38.2 fib, which we see on the daily chart as well. From a 4-hour point of view, This is not a setup because price has gone too much against the 21 EMA. So at this moment, when this setup occurred, the trend was up on the 4 hour, or at least not down. Let me say it this way. So what I would be looking for on the 4 hour is a couple of candles below the 21 EMA, a hook back to the 21 EMA, and then a turn back down. And that could be a 4 hour setup. Back to the odd yen quickly because Derek was talking about head and shoulders and probably inverted head and shoulders, right? You mean a bearish one. Maybe you mean this, for instance, or maybe even this. That's, I think, what Derek means. But it could be bullish too, but I'm not sure how. Let's see. Not sure how that bullish one would play out, but or bearish one actually. Let's see. Somehow maybe like this. Not sure. Let's see. Other pairs. Next one on the list was dollar CAD. All right. Talked about yesterday that there could be a bounce trade, risky bounce trade. I didn't like it, but it did push a bit higher. Now, all in all, I still don't think it's a very desirable environment. We're getting squeezed between support and resistance. If it breaks support, there's a small fall here. If it breaks resistance, then I would like to see a break and a pullback and continue. Let's see. This is not a pullback because price did not break below the 21 EMA here. So this is correction. So I don't see any 4 hour setup to the downside at the moment. I don't see anything interesting to trade actually at the moment. Well, do you have something in mind, Beverly, that you would like to take a look at? Maybe a particular angle, time frame, pattern that you think you wanted to review? 15 chart you can see is pretty choppy. We had price below it, then move above it again. Now it's kind of in between short and long again. In the meantime, let me take a look at Euro Pound. Euro Pound is moving up a lot and got a good monthly candles to the upside. Weekly chart, in fact, what happened was the price broke above the 21 EMA, made weakness here, made a inverted head and shoulders, made a lower high, higher low, excuse me, and made kind of a zigzag correction like that. And the target, first target is basically the 61.8 fib or well, actually the first target is the minus 272 target, and the next the minus 61.8 around this long-term moving average. Okay, so that has already happened. So now the question is how far can it push? We had a bit of a wick here, but still pushing higher. So it's difficult to say. It can always go a bit further than we think. At this moment, daily chart still looking strong. In fact, we had a pullback here and a pullback here and even a pullback here. So that was the third one. That's getting into a more risky zone. Let's see how far this can push. I think that it's getting a bit riskier now to trade it to the upside, but we're still in an uptrend. This is candle number 8. That not too good, actually. So I think that this is a substantial resistance spot that we shouldn't underestimate. So I don't think it's good to go long right in front of that resistance. Here was clear momentum, but so far there's no momentum in this to the upside. So I don't see any trade here at the moment. Myself, that seems interesting. If you are a reversal trader, if I would be a reversal trader, maybe I don't know. I'm hesitant to trade it to the downside actually with the euro pound. I probably wouldn't think about it. So let's take a look at the next one on the list. Was the pound New Zealand? Actually, I forgot Elmo's suggestion. Oh, and well, actually, wait. There's more on the list. Let's see. Actually, I forgot New Zealand CAD. Sorry, Elmo. There was New Zealand CAD and Euro Swiss C before you. Then we can take a look at pound New Zealand. Then we can take a look at Swiss C, CAD yen. Okay, and that's it probably because then we'll be running out of time. So let's see. Quickly back to the dollar CAD. Sorry for this back and forth, but Beverly is saying, I was wondering whether we could see that 4-hour dollar CAD as double bottom. It is a double bottom, but we don't know if the double bottom will hold or if it will break. For sure, it's a double bottom at the moment. Technically, I would say, from my point of view, it is. But is it going to inspire price in a way to make this upside, or is price making a descending wedge after we'll break to the downside? Now, both are tradable. The break could be tradable, and even a bounce now could be tradable, but I don't see a particular edge to go long here. I'd rather wait for the break of that pattern, probably. See some candles to the upside. Let's take a look at the 4-hour chart. I would like to see at least a couple of candles going away from the 21 EMA, like this, and then hooking back to the 21 EMA. That would give me more motivation to trade to the upside upon that break. So yeah, it's a double bottom, but it could be a descending wedge too. So let's see which side breaks, the resistance or support. I think depending on the break, we will have a better feel for which direction the better trade could be. And then finally, as promised to Beverly, the New Zealand CAD. Oh, you know what? Let me just do this. All right, there we go. Let's see. I remember talking about it last week, but I have no idea what we were saying, in fact. Oh, yeah, this bounce would be good to take profit, I think. Wasn't that? No, 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 no. This bounce here would be good to take profit, right? Or to exit for a small loss. But actually, it went all the way higher. It did get rejection there, actually, at the level I said, but then it found, again, support here, right? That made a bigger bounce back, but now moving down again. Got it. All right. So, are you in any trades, Beverly, by any chance? Is there anything to review or just looking for new setups? Well, we have, from new setup point of view, we have 18 candles below the 21 EMA, price retracing, but this pullback was pretty strong too. Now price going below it again. So it looks like on a 4-hour chart, I would say continuation to the downside. Daily chart, this could be just a continuation. In fact, down to the long-term moving average. Trade off the daily. Okay. Let's see. Daily, we have a couple of bullish candles, but if you look at the 21 EMA, it could be a retracement, as you can see, because we had a bit of momentum. We had a couple of bearish candles here. There's smaller candles like this, and overall we have this kind of motion like that. 21 EMA down. So that worries me a bit. Also, the fact that this is still one, two, three, only fourth candle, not breaking this bottom, which means that benefit of the doubt still goes to the downside, I would say, in my opinion. It is a choppy. I mean, I'm not saying it's impossible to see a bounce. could be seen as a triangle too. At this moment, it just looks a bit messy on the hourly. 4 hour is looks more bearish because everything is aligned to the downside now. That would worry me a bit, but it's not to say that you cannot get a zigzag. Hit off the 61.8 fib and go to the minus 272 target. It is possible, but it's a zigzag trade. It's a reversal trade. It's not a with the trend setup. So yes, it could happen, but I'm not very excited about it. Let me say it this way. Let's see. Took the break of the channel, but maybe I'm missing something. Took the break of the channel week before last. I've tightened stop. I'm wondering whether just to cut it short. Oh, is that still the trade from? Is that still the old trade that you had from here somewhere from 92? Ah, it's still the old one. Got it. Yeah, I thought that you were out of that one, but yeah, I it's kind of, I don't want to say it in a way, but it would have been nice maybe even to take it out here. But that's always easy, of course, in retrospect. But um, I was secretly hoping that you would get out upon the pullback like we were talking about. But now, yeah, I can imagine. It is annoying. The thing is with those trades is that it's difficult to get out of those because if you're in trade for a while, um, it's difficult just to exit. I have a feeling because you're kind of in a way like thinking like, okay, this trade hasn't made me anything. I would like to see it give me a return on the time I've been in that trade, right? Or something like that at least. So it is difficult. I understand that. And if it goes up and down, and it kind of you have the feeling it or hope that or expectation that it could go now this our way. Um, at this moment, I don't like the 4 hours I said, but not sure how I would treat it at the moment. We broke this low already. I mean, it could go stop loss could go below this low. Stop loss could go below the 61.8 fib, perhaps below 91. So those are ideas. My ideal exit, to be honest, like I said 2 weeks ago, would have been break even or upon the bounce here. But at this moment, it's difficult because price is now not doesn't have a low anymore. It's now moving down. So um, 91 or this level could be, or even back here. Those are at the moment, I think, the options. The other option would be to put a target again at break even if it does make a pullback because price is now pushing like this and it could make a pullback before falling again. It could also rise this time, who knows? But I think personally, if I would be in such a long trade, I would try to just get out of it. I just don't like this particular pair probably. Let's see, odd CAD. Very choppy. Let me probably a bit fast with this one, and that's that the daily chart does have good momentum, but this has been already a sturdy correction. So I do think that we could be back in the bullish environment, which would be great for the cat. But I would like to see a 4 hour world line up, and we're starting to have that. We got good candles here above it. So I think if we have a 4-hour candle anytime now or in the future that does turn the ADMA back up, that could be an early breakout actually. Right, this is the breakout on the daily, but we're still at the 21 EMA band, so it's still early. This could be a break right here. This could be the pullback, and this could be the continuation. So I think that there's that opportunity there. Now the moving averages are not really that aligned yet, but it is a possibility. I would expect price to go back to the 38.2 fib probably at the very minimum. That would be nice if it manages to retrace like that and then bounce. I think that could be something for me to keep an eye on indeed. So good heads up there, but probably not ready now, but looks like it's going to go slowly but surely back into a bullish environment. All right. So next one is Pound New Zealand. Let me see who asked for the Pound New Zealand. That was Elmo. I don't like the upside just because there's so many candles below the 21 EMAs. The 21 EMA is a big gap of 144. Everything is aligned to the downside. So I categorically would therefore not, like the trade to the downside on the 4-hour chart. We have many candles below this 21 EMA. So what I like more actually, if price manages to get back to the 21 EMA and then turn, that would be great. This would be step 1. This would be step 2. This would be step 3. That would be a great short actually on the 4-hour, in my opinion, from this system point of view at least. This is the dominant candle, so nothing should break this high, which is a good stop loss placement, I think, from my point of view. We're at the long-term moving average of the weekly, but doesn't mean the price will have to stop right there, right then. Could still fall down to the 61.8 target at close to 2.07. Down to the hourly, it actually more looks like a bear flag to me. Break of that bear flag could be a trade setup too. So what could happen is a break of the bear flag, and then we get a retracement up to the 21 EMA, and then there could be another downside. Something like that. And then the same thing. Break lower and pull back, continue, or we get a bigger flag and then continue down. That's what I would be expecting personally on the Pound New Zealand. At 207, of course, things can change. Maybe we hit support levels that are stronger. We do have tops here, for instance, right, to think about, and we might be hitting a fib like this. So there could be support levels definitely on the radar, 205, 207, where price then could stop this downtrend. This is a downtrend and eventually hit a level that it won't break, and that could be the game changer here. All right, let's see, next CAD yen. Oh, let's see, do I have it? Yeah, there it is. Got a couple of beautiful downtrend, of course. A couple of setups here and here, and we had it here too. Now this is a bigger consolidation zone, right? So that in its own right, I would say, is not a short setup upon the pullback because there's been too much of a consolidation there. But it could have been a different. Sorry about that. Let me go back. But it could have been. Let's see. It could have been a breakout trade instead, right? Because when we get a consolidation zone, this is not a pullback anymore. These are pullbacks. These are smaller pullbacks here, right? But this is just a massive correction. So that would be more of a breakout scenario. After that, it fell so fast that it didn't even pull back to the 21 EMA, only here. And that could have been a daily setup somewhere in here. Back to the 4-hour world. It looks like it's actually setting itself up. We got a couple of candles below the 21 EMA. It's moving a bit choppily to the downside. Got support level right in here, so let's see. Not that great at the moment. I would probably like to see. There could be, if price makes a pullback and then turns again, there could be another short there because it's at resistance. That could be one way. The other way, if it doesn't, if it starts to fall again, you get a candle like that, then wait for again a pullback up to that trend line or the 21 EMA. That could be short too. So it's still more of a short environment, just not now, I would say, because it's at the support trend line. All right, that's my opinion. Let's see. All right, I think that's it. I think I went through all the pairs. Let me know in the next minute if I missed something, and we can still take a look at that. Otherwise, Beverly, regarding the reasons to go long, is which pair was that? I'm not sure which one I was talking about at that point. Yeah, yeah, good thinking. Well, first of all, great that you won so many trades. That's very awesome, of course, to hear that. But the New Zealand cat, I know it could still turn up. It's just it doesn't. I mean, from my point of view, it seems a bit messy, but it could be a zigzag. You never know. Let's see. Roger, odds, Swiss, odds, Swiss. The only thing in general, though, indeed, and that's not only for you but for everyone, is that as sometimes it is difficult to kind of get cut a trade from a psychological, perhaps trading psychological point of view. Sometimes. Let's see. New Zealand. Where's that one? I don't think I have it, or maybe I do, but I'm not in the mood to search. Let me just open a new one. There we go. The odd cat. Yeah, it seems iffy at the moment. I mean I can see there is potential to go into a bullish mode. To be honest, the best would be another bullish day like this, then a retracement and a bounce. That would be a very nice breakout to the upside. 4-hour chart, we'd probably like to see price retrace a bit deeper, and then on the hourly chart, for instance, if it does retrace a bit deeper like that, see if we can get a 1-hour movement above the 21 EMA, see if we can get that pullback to the 21 EMA, and then take that bounce. That could be another way. Just quickly checking the higher time frames here to get a bit of a feeling for this oddswissy. Daily chart. I don't know, of course, which strategy you're looking at, so there could be plenty of reason for you to go long. From my point of view, it looks choppy and corrective, and I'm not a big fan of the environment at the moment on this oddswissy. Um, let's see. It could be a bounce moment, sorry. Um, I don't know. I'm not a big fan of it at the moment. It seems to be too mixed up. 1 hour is retracing, 4 hours bouncing off a trend line, but trend is up, but resistance is nearby. So it would be too many things kind of but bigger time frames are down actually. Daily is sideways. I don't see something interesting at the moment for myself personally. All right. Well, thank you so much for all the suggestions. Great to take a look at the pairs that you find interesting as well. We're running a bit out of time now, so I will only say that we have webinars tonight with Nanette Price Action Trading School Pivot Points, and tomorrow we take a look at how to manage your open and potential trade setups. 5 p.m. both days, GMT time. And appreciate all your comments and suggestions. That's always very, very good. And wish you all great trading. Cheers, everyone.